What's up, YouTube? Eric here. Just want to give you a quick market update. I'm going to talk about a few different stocks. First, we're going to talk about the macro, real high level, give you an update on stocks like Nvidia, ASML, Lucid, and more. So this morning we got retail sales, and those rose 0.7% in September, much stronger than anticipated. In fact, the Dow Jones estimate was just 0.3%, and sales were up 0.6%, also well ahead of the forecast of just 0.2%. So I've been telling you, expect more volatility, and we're seeing it today. We had, actually the NASDAQ was down 1.5%, went to green here just recently, so very, very volatile market here. The VIX is still under a 20, but it spiked 20% last week. So these numbers are not adjusted for inflation, so they indicate that a consumer, basically, the consumers are keeping up with prices. So with macro, we've got that push-pull. What happened this morning is we had bond yields go higher and we had stocks go lower. We've been talking about as the treasury yields go higher, growth stocks and riskier stocks, they generally are going to sell off on those higher interest rates. And I think most people expect the 10-year treasury to get over 5%. Of course, that's also pushing mortgages up. And what's interesting is the housing market, it has slowed down some, but it's still pretty strong with very high interest rates compared to what we've seen over the last, 10 plus years. So on a year-over-year basis, sales rose 3.8% compared to 3.7% increase for the CPI. And what this is telling you, the reason that treasury yields go higher is there's fear that the Fed is going to raise rates again. And that's going to push treasury yields higher, mortgage rates higher. It's going to squeeze the consumer more. But this is showing you that the consumer is still spending, which is a positive, but it also is showing the Fed that perhaps they're not done with increasing rates. And a quote here, the US consumer can't stop spending. Now the question is, are we spending with money we actually have from savings and from income, or are we just using more credit cards and going further into debt? All three retail sales reports for Q3 were above estimates, which puts us on track for a strong GDP number. Now that's the positive, but it also gives the Fed zero reason to loosen policy, which keeps the 10-year treasury yield pushing towards 5%. In addition to that macro news, we also got home builder sentiment, and that dropped to 10-month low as mortgage rates, of course, soar. Builder confidence in single-family homes dropped to the lowest level since January. So switching gears, we've talked about INDI Semiconductor several times on the channel. The most recent video I did, I said INDI, Semiconductor was a buy in the fives, especially if it got in the fours. It got into the fours for a day. That was on Friday, and then Monday, this news came out. The stock popped 20% yesterday. And of course, part of that was a short squeeze. Had something like 15 to 17% short interest. As the price rises, you're going to have traders get out of their shorts. They're going to cover their shorts, cause a short squeeze. But it's brought the price back into the mid fives to high fives. So the news here expects Q3 2023 revenue to be above $60 million and slightly higher than guidance. I think a lot of people were expecting INDI to slow down, and I thought that was a possibility too. When you look at the labor unions going on, the striking, a slowdown in not only production, but also the consumer buying vehicles. INDI Semiconductor, of course, is focused on automotive. Now, one thing you have to keep in mind is when INDI reports earnings, that's going to be lagging data. So anytime a company reports earnings, it's the previous 3 months of data. The question is what happens when you zoom out another 3 and 6 months as the consumer spending slows. Now, with that said, we just told you that retail sales rose 0.7% in September. So that is lagging, but that's just last month. So INDI Semiconductor is going to have earnings called November 9th. So right now, INDI is trading at $5.82. But you can see it got down to $4.82, and that was just last Friday. Now look at some of the valuation metrics. This is on Seeking Alpha. EV sales, that's going to be a 5.64. They have that rated as a D+. So it's still not dirt cheap. Price to book 2.17. That's getting more attractive. The forward price to book under 1.97. Now, INDI Semiconductor is telling us that they're still going to be profitable this year. And maybe that doesn't happen and it's 2024, but that could change the sentiment. And this really could see a big turnaround if they can continue to grow and have that 90 to 100% growth and have profitability at the same time. This is a spec stock. We talk about 10X or 0, but it's one I have high conviction in. If you look at the price to sales ratio, the forward on this is 3.91. The TTM, that's 12 months trailing, 4.82. Another one that people have been asking me about is SKYT Technology, and it's trading back above $6 here at $6.14. Now, I understand a lot of people that are on YouTube, you're probably newer investors, and that's totally fine. That's part of the reason why I created the YouTube channel. I want to help new investors be successful. That's really the main driver of why I started doing this channel in 2019. It was kind of a part part-time gig, and now it's what I do full-time, semi-retired, trying to help you guys be successful in the stock market. So oftentimes with new investors, and trust me, I get it, I've been there myself, the stock price will drive sentiment. So when INDI Semiconductor gets down below $5, people start panicking, start selling, they start asking me, what happened to INDI, what's going on? The reality is that sometimes the stock gets broken, but it doesn't necessarily mean the business is broken. Remember that when you buy a stock, you're buying part of a business. SkyWater is no different. Nothing has changed with the fundamentals. In fact, if you look at this, the price to book is 3.21. That's higher than INDI Semiconductor. The price to sales, though, is only a 1.02. And that's 12 months trailing, but the forward 1.03. So you're talking about one price to sales. Now, this stock doesn't have nearly as much growth as, say, INDI does. This is still one I consider spec. It's going to be more in that small cap foundry space, where INDI Semiconductor is focusing on fabless and specifically in automotive. If you look at the growth on SkyWater, though, it's not bad at all. Year-over-year revenue growth, 49.82%, forward 25.46%. However, INDI is at 97% for revenue growth year-over-year, and that forward revenue growth is still at 95%. So it's still growing strong. Small cap stocks like this, especially that are not profitable, that are burning cash, the sentiment is going to be very bad when you have a macro environment like we have right now. Those are the type of stocks that get thrown out. Now, eventually that sentiment's going to change, and these are going to be worth more. I'm confident of that. Of course, I can't predict time, and I could be wrong, but I'm very confident that both of these stocks will do well. I consider INDI more of a 10x or 0 spec type play. SkyWater, I consider it more of a 5x or 0 type spec play, and they both could be 10x. I think INDI has higher potential to be a multi-bagger and to give you those 10x returns than, say, a SkyWater. That's just my opinion based on my research, and I've spent a lot of time on both of these small cap semiconductor stocks. Sticking with semiconductors, got a couple things to cover here. This is just for fun. I don't know if you guys knew this or not, but it's pretty interesting. So Nvidia CEO Jensen Huang returned to Denny's, where Nvidia launched a $1 trillion vision. So there's the plaque here, the booth that launched a $1 trillion company. Congratulations, Nvidia. Who knew that an idea started here at Denny's would change the world? So Jensen says, I was a dishwasher, a busboy, I waited tables. No one can carry more coffee cups than I can. What's interesting is I got my start in restaurant as well. And I started working in restaurants when I was around 11 years old. And I actually worked in restaurant industry all the way through college. My first job out of college, I was actually an assistant manager of a barbecue joint. And then I pivoted into mortgage and real estate, and then into software, and now this. And of course, that whole time I was investing in the market. It's always really been my passion when you think of personal finance and just stocks. And this is what I've wanted to do for a long time. YouTube made that dream come a reality. I mean, before YouTube, you think about it, a lot of you guys don't even know a world that exists without YouTube. When I went to college, I didn't even have a cell phone yet. So it's kind of interesting if you think about this. This is a pretty cool story though. In 1993, three friends, so Jensen, and then you got Chris and Curtis here, met at Denny's to discuss creating a chip that would enable realistic 3D graphics on personal computers. And of course, you know the journey here with Nvidia has really pivoted the business from graphics and gaming more into data center and enterprise. And really, when you think of AI, a full stack that has not only the hardware, but also the software. Now, while we're on the topic of Nvidia, this is big news here. And this is part of the reason Nvidia was actually down 7-8% this morning. It's recovered a little bit. So new US-China chip curves says no meaningful impact in the near term. Now, if you remember this whole soap opera here, essentially what happened is we basically blocked China from getting the most advanced AI chips. So those are the H100 chips. Now, the new restrictions here are going to target NVIDIA's A800 and H100 chips. And these were created for export to China after the US unveiled its initial restrictions back in October of 2022. So NVIDIA basically made a watered down version of the H100 chips that was acceptable to the government, and now the government is changing its stance on that. This also talks about getting licenses of 40 different countries that China could essentially use as basically middlemen to buy these chips. And the Biden administration is also expanding the scope of manufacturing gear, and this is talking about DUV machines supplied by ASML. So two important names here, NVIDIA, ASML. Of course, there are other ones down here. You got Intel, AMD, Marvell Technology, Qualcomm, Broadcom, and others. Given the strength of AI demand, NVIDIA previously commented that additional export restrictions, if adopted, so they've already saw this coming basically, would not have an immediate material impact to financial results. However, over the long term, this would represent a permanent sales sales loss according to the analysts. So it does impact these companies longer term. Now for ASML specifically, despite the news here, you've got Raymond James starting coverage of ASML with a strong buy rating and a $725 price target. In another article I saw earlier today, the reason for this, it's saying that even though these aren't the most advanced chips, that you could just use more of them and get the same results. It might be a little bit slower, but overall the same results, and the government is trying to stop China from having the ability to do that. So right now the QQQ ETF is essentially flat, and if you see orange on your screen, those are previous chart days. Yellow is the most recent chart day. And we talked about recently how the upside, 375, 381, 393, downside could go to 332. So right now we're hovering around $369, $370. You can see you've had a double bottom here and you did have a pop up. We had some resistance around that 375, a little under $375. Of course, what happens next? Well, it depends. It depends on what the Fed does. If the Fed raises rates, I think there's a chance you're going to see some more volatility and another sell-off. I think the market overall wants to go higher. It's trying to look past this, trying to look forward to when the Fed's going to actually cut rates and go the other direction. But we do have some macro risks. I know I've been talking about it a lot. This just kind of adds some more clarity of what's going on. Looking at a few stocks we've covered here recently, just to give you a quick update. You can see Square, it bounced off of like $40 range. I had some more. I had a limit order to buy more shares at $39.97 or something, just missed. I did buy some when it was under 45. It's now hovering around $46. So we'll see how that holds up. Of course, earnings season's in full effect here, guys. We've got earnings November 2nd. And that could make this stock rip 20% or drop another 20%. And that's going to be the case really with most of these stocks. So tomorrow we're going to do chart day, Patreon Discord at 9 o'clock a.m. Eastern. And I'm going to be telling the gang repetitively, hey, it really depends on earnings. You've got earnings coming up. Earnings and the macro overall are going to make the stocks pop or drop in the short term. The macro is not going to tell you about 5 years out and 10 years out. And a chart certainly is not going to do that either. So if you're a trader, those type of things are very important. You think of obviously earnings and macro, they're important to investors as well, of course. But I'm not going to liquidate my portfolio trying to guess what's going to happen with the macro or try to, liquidate one of my stocks because I think earnings might not do very well and then try to buy it back lower. That's just not the game I personally play. And so you have to decide, are you an investor or you're a trader? If you're an investor, 12 months or more typically is a long-term investor. At Fired Up Wealth, usually 5 years or more is what we consider a long-term investment. Now, I know if I don't say this, I'm going to get a comment. Well, you don't just buy and hold stocks forever. I agree completely. I actually don't like it at all when I see titles of videos or articles that say 5 stocks to buy now and hold forever. You don't ever go into the mindset of buying something and holding it forever. You buy, you hold, you monitor, you analyze, you listen to earnings. If the story changes, your conviction changes, then you have to sell the stock, or if it's parabolic. And I recently did a video here, masterclass video, that covered when to sell stocks, and all tiers actually have access to that. Go check that one out. You can visit patreon.com/firedupwealth, join any tier, and you can watch that video. Lucid stock, but I think it's an interesting one, and it's back in the penny stock range. $5 or less is considered a penny stock. Seeking Alpha says, warning, Lucid has a high risk of performing badly. Well, there are quite a few stocks actually on that list. So this is where it can get a little bit scary. And of course, this is a spec stock, but it's even more speculative than the spec stocks that I own, in my opinion. And you say, well, that's just your opinion. I get that, all right. Price to book is a 2.02. The problem is they're not producing cars. And in order to produce more cars, you're going to have to spend a boatload of money to increase production and that manufacturing capability. So looking at price to sales, TTM 12.5. Now the forward price of sales is a 15. Even like EV sales, TTM 12.35. It's still expensive even at $5 a share. The reason it's down today, it was down 5% earlier today. Lucid falls 5% after EV deliveries fall sequentially. Of course, these are very expensive cars. They're beautiful cars. There's a difference between what's a good investment or something that you might like as a consumer. I personally don't spend a lot of money on cars. If I did, I would consider something like a Lucid Air, but I just don't. So it's not really in my, I guess you call it budget. It's just not something that's important to me. I drive a Honda CR-V and it's part of part of the reason why I've got millions of dollars, because I like to save money and I save that money and invest it in the stock market. Now, that's not a judgment if you like to spend money on cars, not at all. I've got my own vices. I spend lots of money on vacations. But looking at this, Tuesday it announced produced 1,550 vehicles during Q3, had another 700 vehicles in transit. The company delivered 1,457 vehicles in the quarter. And by comparison, they had 2,173 vehicles in Q2 and delivered 1,404 vehicles. So delivery numbers, 1,457, that's actually an increase over that 1,404, but production dropped from 2,173 to 1,550. Now, Enphase bounced off about $111.44. I still do like this one, even at 131. I prefer it 125 or less. And this is tough. A lot of people were waiting for this to go to $110 before they bought, and they might have missed the boat completely. That's personally why I like the dollar cost average. My price point was 125 and I bought it as it goes lower. I didn't fill the position all the way, so now I have to decide, do I want to pay up a little bit or wait? Personally, I'm going to wait because, again, earnings. We've got earnings coming up October 26th. Now, the risk, of course, if earnings are good, the stock could pop 20% and you're going to miss that 20%. If earnings are bad, you could see the stock under 110, maybe even under $100 a share. And unless the story has changed dramatically, that's probably where I'll start buying more shares. If the stock runs, it's a high quality problem to have because I do own some shares and I'm still happy with those, with those gains regardless. And this is where portfolio management and risk management is so important, because if this was a core position, it would have a different approach. I would have a different approach of how I buy and how I dollar cost average. I like this stock. It's something that I wouldn't mind owning a couple percent in my portfolio. And people say, why even own a stock when it's 2%? It doesn't move the needle. If you have a $1.5 million portfolio, 1% is $15,000. So if I have $10,000 in a stock and it goes up 5x, that's $40,000 profit. In my eyes, that's a lot of money. I don't come from money, so 40, 50 grand to me is a lot of money. It might not be to you. So 1%, yeah, if I have a $500 portfolio, 1%, 2%, it's not really a big deal. I obviously look at percentages, but dollar amounts are still significant. And so my core positions are going to be the ones that I've had for years. I've been investing 25 years. A lot of those stocks, the majority of them are house shares. They're profits. I'm just holding those. So NVIDIAs and the Amazons and the Apples, the Lam Research, Microsoft, and so on. They're either, extremely profitable, up, 600%, 1,000%, or they're completely house shares where I've taken my initial investment, some profit, and I'm just riding on those house shares as part of my core. I'm going to cover Tesla real quick. Before I do that, if you're new here, subscribe to the channel, click that bell for notifications. If this video is helpful, drop me a like and drop me a comment. So Tesla's trading at 255. I did add some shares when it was in the 240s, and that's a risk. Obviously, it's just a few shares that I added, and it was in my retirement, and I own a lot of shares at lower prices. Looking at earnings on this one, you've got October 18th. And if the stock does fall on earnings, I'm going to add more shares. If it goes higher, high quality problem to have. And of course, the valuation metrics aren't going to be attractive by standard metrics. So you look at Seeking Alpha here, price to book, 15. Price to sales, 8 on the Ford, 8.53 on the TTM. The PE ratio, it is profitable at least, but the PE ratio, the TTM, the non-GAAP 63, the GAAP TTM 72, the PE GAAP Ford 86.95, not a cheap stock. Now, on the other hand, you've got profitability grade and A+, some strong numbers here. And growth, pretty strong, 39.99%. This is year-over-year revenue growth. Ford, 32.69%. And I did a video on the channel explaining where I think the stock could be in the next 5 or 10 years. If you haven't watched that one, go check it out. It gives you some price targets where I think it might go 2027 and 2030. That's all I got today, guys. Just a quick market update, talking about a few of my favorite stocks. If you're new here, subscribe to the channel, click that bell for notifications, drop me a like, drop me a comment. Have a great rest of your day. Take care.